But we've got Vishal Manjanda joining in on the show right now to talk about how has he looked at the pharma pool of earnings. Vishal, hi, good morning. Good to have you on the show. Tell me, how is it that you've analyzed pharma companies so far? Which have been the biggest hits for you and which have been the misses?
Yeah, good morning. So I think as we see earnings so far, not many surprises that we have seen. So broadly, I think what has not gone right with the sector is probably the US generics has not shaped up the way we had expected for Q4. And largely because some of the high value launches have been deferred. The contribution from these high value launches have been deferred a bit. Just that, but otherwise, I think largely in line the sector. The India business continues to be in the same range, 8 to 11%, and the US continues to benefit from the high value launches. So that's broadly what we have seen, and it's broadly in line with what we have seen in the previous 2 quarters of the years, previous 3 quarters of the year.
The generic business still struggling because from last 3-4 quarters, the view in the market is that generic prices have bottomed out. The base effect has kicked in. Mild pricing power is coming back in oral generics, and a lot of pricing power is coming back in CDMO and injectables. But I don't see evidence of that. Why is that?
Yeah, so I think on generics, we have been talking about pricing power, but as you said, it's not getting reflected in the numbers. Only what is getting reflected in the numbers is the high value launches that we have seen in the US. So I think most companies still continue to say they're facing 5 to 9% base business pricing pressure in the US. And I think nothing has broadly changed in terms of the competition. It continues to be as intense as it was in the past, the US generics.
Now, with the new proposed regulation on pharma pricing, the executive order has been passed. There is fear that there is an overhang of tariff which you don't know which way it would move. Do you think pharma sector could run into rough weather on the pricing front and also on the regulatory front?
I think so. We have discussed and talked about tariffs in the past. So I think even if tariffs are put, we have no other option. The Indian generic companies to pass on the tariffs to the US consumers because there is not enough margins within the business to absorb the tariffs. So only pockets of there are certain pockets where we'll need to absorb the tariffs, and these would be the high value limited competition launches that Indian companies have done in the US. So only those pockets will need to absorb the tariffs, while the rest of the business, which is the commodity business, where we have no other choice but to pass on the tariffs. And I think neither does the US has in terms of sourcing. They probably don't have an in-house source to replace what India sells, and neither they would have a source to replace even after we account for the tariffs. The price of domestically manufactured products in the US would still be more expensive than what it would be from what it would cost them from India.
Vishal, let's talk about the specifics because many companies, for them, the US business has actually seen a good growth because of the Revlimid sales. How exactly do you think this is going to pan out going forward, given that competition is also likely to intensify?
So right. So I think we have seen a good ramp up for the US business across the board. All the large caps have benefited from the Revlimid exclusivity, but we are now close to kind of this exclusivity getting diminished. So I think the next 2 quarters we'll see a ramp down and then a sudden fall from where it is. And I think investors need to be prepared in terms of seeing earnings significantly coming down from where they are today. So that expectation has to be built in now.
Next, Revlimid or the blockbuster drug for Indian pharma sector, because Revlimid benefited everybody from Reddy to Cipla to Sun Pharma. Everyone made money. I mean, it was like this pot of gold which everybody benefited from.
Yeah. So I think to varying extents, some kind of have I think 40-50% of their profits coming from Revlimid, while a few which are dependent on Revlimid, but they have only say 5%, 6% of their profits coming from Revlimid. So those with a larger contribution from Revlimid would stand to be impacted more. So I think everybody is trying to replace Revlimid with high value launches. Everybody has a pipeline, but getting regulatory approval remains uncertain. So you can't really predict whether you would get the approval next year or maybe it can take 2 years. So complex drugs are very difficult to crack from a regulatory point of view. We might see disappointment next year. But what I can say about the US, we are on a high base. Even if companies are able to crack the next jackpot, they would still not be able to grow on this base. I think the best case would largely be low single digit growth on this base. That probably is the best case from a US earnings contribution point of view.
Vishal, are there any green shoots when it comes to the API segment in particular for pharma sector? Because, this is one segment which has been quite the drag for many companies earlier.
So I think so far generic API pricing remains under pressure. So we haven't seen prices of generic APIs moving upwards. We have seen a downward trend over the last couple of years. And that's also benefiting the formulation manufacturer in terms of lower raw material costs. So I don't see a recovery as of now, but obviously what we are witnessing is the CRAMS company, which are doing innovator APIs, they are doing a lot better than those just focused on the generic APIs. And I'm not sure when we'll see a recovery in the generic APIs. It remains a competitive market.
Tell me about the GLP-1 opportunity. I mean, the whole world is in a craze about it. Tell me which Indian pharma companies actually stand to benefit out of this.
So I think a lot of all the large players are planning to launch a semaglutide brand in India and all the emerging markets where the patent expires. So I think the patent will expire next year, 2026, and all the large names. So I think from an India market standpoint, India opportunity standpoint, those with the best presence in the diabetes space stand to gain more. So I think companies like Sun, Lupin, which are well entrenched and in the diabetes category, they probably would do well, but they need to be sure they reach the market on time. So basically, at the time of market formation, they need to be in. As of now, none of the branded players have got an approval from the regulatory authority for their semaglutide formulation. So that approval is still awaited. So we'll wait and see if all of the large players get to launch semaglutide in India, while they're also trying to launch semaglutide in other emerging markets and markets like Canada, regulated markets like Canada. So I think these will be competitive spaces, not that it'll be like you want. So there'll be many players chasing this opportunity, and even the innovator would like to chase this opportunity.
So if you have to, let's say, talk about then companies where you think, in pharma, it's important to identify trigger. One is compounding, second is trigger, because for 1 to 2 years, if you're able to identify the product line or the trigger line, I think that is where the gains are going to be. So I'm just framing this question for the benefit of our viewers, that identify the trigger when you're investing in a pharma company for 12 to 18 months, looking at the product pipeline or the global launches. So which are the companies where there are triggers, Vishal, according to you, for 12 to 18 months now?
I think pharma is largely driven by the launches that you have and the size of the opportunity that these launches represent. So if I look at the large cap space in the pharma, Sun Pharma is one which probably will be doing 2 or 3 large launches in FY25, FY26, and these launches, each of these launches can be a $200 to $300 million market opportunity. So if I look at what companies can deliver in terms of growth over a 2 to 3 years horizon, Sun Pharma is chasing the largest market opportunity, and they are prepared in terms of the regulatory approvals. So those are in place, and they just need to kind of execute on the commercial level. While for all others, I would say there are opportunities that we are looking at, but these are not certain. We'll have to wait and see whether the regulatory approval pans out. And again, I think even if these approvals pan out the way we are expecting, these are not going to translate into the amount of growth that probably Sun Pharma can deliver.
Okay. So if you have to invest in one pharma stock, one, not a basket. Analysts लोग basket बोल के निकल जाते हैं.
Yeah.
One pharma stock. And one Indian pharma stock, not MNC. We've only discussed generic and we've discussed triggers, but there's an Indian market which you said in your opening remark is growing at a higher rate than the generic. And Indians are consuming more medicine because of affordability, insurance, etc., which is one Indian pharma company you would invest in, which is a beneficiary of Indian pharma trends or domestic pharma trends.
So I think again, if you look at the fastest growing company, one of the fastest growing company in IPM is Sun Pharma. They have 33% of their sales coming from India. And I think if you look at another name, Ajanta Pharma, they are also around 33% of their sales from India. Even they are growing around that 12-13% level in India. So those are the two picks I would look at. And I would prefer Sun over Ajanta.
All right.
Okay, Vishal, great to have you on the show. Thanks as always for your time and, discussing the prospects of the pharma sector from here onwards.